Hi there, and welcome to our sit down with Hardman Co's Head of Tax Advantage Research, Brian Moretta. We're here to talk about the review that we've released on Empirical Ventures, and let's get going. Let's get started. So, what is the investment strategy for the fund?
Well, the Empirical Ventures S EIS Fund specializes in early stage deep tech businesses, investing across a broad range of science led sectors. The manager looks for companies with defensible intellectual property, large global markets, and founders capable of commercializing complex science. Our portfolio is expected to contain 13 to 15 companies, which provides better diversification than many EIS funds. Most investments are made at pre-seed and seed stage, with follow-on funding for the strongest businesses. Target return is a net 3.1 times multiple or a 17% IRR.
Great. Okay. And then could you tell us a bit more about the fund manager?
Well, Empirical was established specifically to address what its founders saw as a shortage of venture investors capable of leading deep tech transactions. The investment team combines extensive scientific experience, with most members holding PhDs, alongside commercial and venture capital experience. The business has grown out of the Science Investors Angel Syndicate and now manages investments through an annual SEIS fund supported by SFC Capital as the authorized fund manager. Although still relatively small, the team has expanded materially over the past year and continues to strengthen its investment and operational capabilities.
Great. And how does the manager source deals?
Well, Empirical has developed several differentiated sources of deal flow. Referrals from other venture funds have become one of its strongest channels because the firm is often regarded as the scientific lead on transactions. The founder's own profile also generates opportunities, particularly through Bread Miles' science-focused YouTube channel, which has more than 2 million subscribers. These are complemented by university relationships, venture scientist fellowship, portfolio company referrals, and the legacy venture studio. Together, these channels produce more than 400 opportunities a year, providing a strong pipeline despite the specialist focus.
It's interesting. Okay. So, what is the after investment support like?
Well, Empirical believes its greatest opportunity to add value comes during the first 2 years after its investment. It normally takes a board seat or observer role, helping founders develop effective governance while contributing to strategic decisions. Support combines scientific expertise with commercial advice, including intellectual property, patent strategies, marketing, brand positioning, and business development. The team aims to exert influence collaboratively rather than directing companies, while a scientific network and communications expertise can also help portfolio companies build credibility with customers, investors, and potential partners.
Brilliant. Okay. So, lastly, could you summarize the manager's past performance as well?
Well, the fund remains at an early stage, so performance should be reviewed accordingly. As of February 2026, 13.1 million had been invested across 31 rounds into 28 companies. No exits yet, and an aggregate unrealized multiple investor capital of 1.01 times. Only 2 companies have seen significant valuation uplift so far, while most remain close to cost. The predecessor science investors Angel Syndicate provides some additional context, having invested 4 million into 12 companies with unrealized multiple investor capital of 1.37 times, though it too is still awaiting its first exit.
Okay. Thank you, Brian. Thanks for your time. So, if you would like to know more about Empirical Ventures, then please do check out our recent report on our website. We've got the details in the description below. Don't forget to like and comment on the video and join in the conversation wherever you're watching. Otherwise, we'll see you back here next time. Thank you.